Hey everyone. Thank you so much for joining our question and answer video session on preparing for tax season, asking the experts. We're here today with Trent Bigelow, co-founder and CEO of Track, and Jaysa Richards, the founder and president of Accurate Methods Consulting. Trent is the leading Track, which is a withholding API for apps that serves independent workers. The company's mission is to increase financial security for 57 million self-employed Americans. And Jaysa has over 2 decades of finance and tax experience with Anderson LLP, Deloitte, and Touche as CFO of Ensoro. And she started her own company called Accurate Methods Consulting, which is a bookkeeping company for small business owners. So thank you both so much for joining us today and lending your expertise to all of our business owners who are curious about preparing for tax season and what they need to know. I'm Sandra Crawford, Director of Marketing at Alice, and we'll be taking your questions throughout this webinar. So please post them in the Q&A feature that you'll see at the bottom of your screen if you have any as they come up, and we'll work them into the conversation. Let's get started then. So Trent and Jaysa, do you want to give a quick intro of yourself, your accounting, bookkeeping, and tax expertise? Just a quick disclaimer that none of us three are CPAs. So if you want to get a very specific question answered about your business, I do recommend you talk to a licensed CPA. But Trent and Jaysa, do you want to give a quick intro of yourselves?
Happy to follow Jaysa.
Oh, well, I think Sandra did a great job. We handle a lot of bookkeeping, and, in handling bookkeeping, oftentimes you have to prepare financials for the CPAs that put things in the right place. And so we can definitely assist with any questions you have in regards to what is deductible, where do things go so that you can get the maximum deductions for your taxes.
Great. So again, Sandra actually gave a great intro for both of us. The quick takeaway, I guess, for what I'm working on with our team is we are on a mission to make the self-employed more financially independent and secure. Our main program is actually in partnership with AARP Foundation, which is maybe not what you think of necessarily for freelancers, but their realization was that there are so many people over the age of 50 that are becoming gig workers for the first time. And so if anyone is interested in getting free tax withholding services, you don't have to buy it from our company. You can just get it free through our partnership with AARP. And I'm sure maybe we can follow up with that link as well, but it says self-saver.org.
Awesome. Okay, so let's kick this off with just kind of some general questions here. What does a business owner need to know to set up a bookkeeping system? Jaysa, this might be the best for you.
Right. I would say, first understanding the industry that you're in and kind of the revenue streams that you have. So, you kind of look at what revenue streams do I have, what expenses are related to those revenue streams so that you can understand your gross margins, how much money are you making on a particular service line, so that maybe you can decide that, a certain service line is doing better than the other. And maybe there's some tweaks that need to be made to one service line over another so that you can make that particular service line more profitable. And all of that would occur in how you prepare your books so that you can get the information out of that in order to make the right business decisions.
And how would you say bookkeeping is different from accounting?
Personally for me, it's not much of a difference. I think a lot of people associate bookkeeping to more of data entry, just getting numbers into the system, and that the accounting would be more like accrual accounting, so not cash accounting, not the money that you spend out or the money that you take in, but actually like AR receivables going on the books, the accounts payable, money that you owe other people, showing up on the books, properly accruing expenses into the period in which they're associated with, and matching those expenses with the revenue. And so I would say, accounting is more, those specifics, with more like the gap accounting, and that the bookkeeping is more just data entry. But I would suggest everybody, keep their books more on an accounting basis for sure. Yeah.
And how often does a business owner need to be checking or looking at their books?
I would suggest once a month. Things are, changing pretty consistently when you're doing business. And I have a lot of business owners that tell us, I can't believe, once we do their books for a particular month, they're like, I can't believe this. I feel like I made X amount of money. And so in order to take the feeling out of the financials, you should keep up with it monthly in order to know what you're actually doing.
Got it. Got it. It looks like we have a few more people joining. So welcome, everyone. We're talking taxes with the experts. So as you have questions during this conversation, feel free to pop them in the chat or in the Q&A feature you'll see at the bottom of your screen. Let's move on to the next question. What is a CPA for anyone that doesn't know?
It's a certified public accountant.
And does a business owner need one?
I would say yes. I would definitely suggest that a business owner have a CPA in order to assist with their taxes. I mean, it's not a dire need, but I would recommend it.
Okay.
Yeah.
And
just to add on to that, I think that bookkeeping services like both of our firms are excellent to, I think, help business owners know kind of where they've been. I think that what CPAs and tax attorneys do really well is thinking about where you're going in terms of kind of developing strategies and giving you, again, really high level advice for a unique situation.
That's great. So what would be the difference then between getting an accountant and using a software such as TurboTax?
So I think that the softwares will guide you into where to put the information, but there's things that I think automated systems can't allow for, like the exceptions of things, and that a CPA can kind of look at the higher level planning of an organization or of your specific situation and kind of say, hey, if you had put money into a 401k, you could have saved $20,000 in tax dollars. But the program is just saying, did you put money into a 401k? So, Trent, I don't know if you have something to add on to that.
Yes, I think it really, just like you said, it depends on the situation. The more complex the situation is, the more likely, obviously, in common sense, right, you'll need more expertise. I think that it also depends on certain types of income. I mean, I think that for most of the people who are on this call are small business owners or freelancers. I think that doing bookkeeping is better than not doing bookkeeping. I think in the beginning, you can oftentimes learn from other people who have been before you. But as your situation gets more and more complex, at least during tax time, thinking about retaining, if not a tax attorney or an accountant, maybe even an enrolled agent or a tax preparer who specializes in small businesses. I think companies like Intuit, obviously they have bookkeeping services like QuickBooks or QuickBooks Self-Employed. But I think the important thing is to remember is that bookkeeping products are different than, say, TurboTax. TurboTax will help you at the end of your filing. Bookkeeping really helps you for the 365 days around the year so that you're in a good position to use products like TurboTax or H&R Block or Tax Preparer.
That's great. And that leads into my next question. In terms of bookkeeping, what is a bookkeeper, and does a small business need one versus using a software?
Of course, I'm going to say that a small business needs a bookkeeper, and I genuinely believe that. They're just little things about the accounting laws that we notice. People who choose to do their books on their own don't catch. Uh, like sometimes we'll see people take credit cards and deduct them as expenses instead of so they'll have like a credit card expense on their profit and loss instead of setting up a liability on their balance sheet and applying the payments against the credit card against the liability, reducing the balance of the credit card debt on the balance sheet. And so, for them, they could be looking at a set of financials and think, oh, I'm doing, poorly, or I'm doing very well because they handled the accounting on their own and the financials aren't properly reflecting the state of their business.
And we just had a question come in from one of our attendees. I think it will tie into this CPA or bookkeeping hiring discussion here. So they're asking, what do you do when you're already in trouble and want to rectify? Long story, but I'm behind by 1 year and I feel so stressed because I don't know what to do or who to talk to get this sorted out.
So
do you think that would be a bookkeeper or a CPA, or?
I would say that would be a bookkeeper. If she's behind 1 year, that probably means that she hasn't entered any of her financial data into, some kind of accounting system. And so, I would suggest that you find a bookkeeper who can help you get your information in order. They should be able to do that rather quickly. And then once you get your financials in good order, having a profit and loss and balance sheet, then you can submit that to your CPA in order to do your taxes. We have a lot of people, around this time that contact us and say, hey, I haven't done anything for 2019, can you help? And, we just get their information, their bank access, and put that information into, a program like QuickBooks, and prepare financials so that they can get their taxes filed.
I think to add to that, I'm sure the questioner probably is aware that the reason why they do need to take care of it is for if you are behind even a couple quarters behind your paying your estimated tax payments, if you're a freelancer and you have $600, expecting more than $600 a year in income, that interest will accrue over time. And so for many of us who have W-2 or traditional employment income, as well as maybe our side hustle or our small business, it doesn't seem as crazy because it's coming out of our tax refund. But just remember that the IRS is calculating what you didn't pay on time. So that's probably speaking really to the urgency of making sure that you do catch up as quickly as you can.
That's a great point, Trent. So how does a business owner go about choosing a bookkeeper or accountant? How do they find the right one for them?
QuickBooks has a list of pro advisors that are well versed in QuickBooks. I think that's a good start to find someone, and then asking them a list of questions like, if they have experience in your particular industry. It's really hard to determine if they know accounting the way that they should know. But so I would probably ask about their background and experience to see if they, have the, I want to say proper credentials, but the proper background in order to properly handle your accounting.
I think that you could also look at this as kind of, there are three phase steps to this, right? So the first step is just doing any kind of bookkeeping yourself, whether you're doing it in Excel or using software like QuickBooks. you at least should be doing that. Maybe then the next step up is spend more time focusing on your business, less time, on the busy work, like bookkeeping, and then being able to hire maybe an actual human bookkeeper to do it for you. Of course, the cost is higher. But then eventually, if you feel like your situation becomes so complex that you actually need financial strategy advice from either a CPA or a CFA, one thing that I've seen work really well for finding those people, first off, just go to people you know and respect in your own social network. Chances are, if they're successful, they already rely on a financial professional, and that you should probably trust just the social proof within your own network first. And then beyond that, if you know that your situation is so unique, maybe to say your profession, just even going on to obviously reading blogs online. I think really smart CPAs and financial professionals know, especially now in this climate, that they actually need to be building content and stories around why they can be a trusted expert. So I think the more you think about your financial situation, you figure out how to research that, the more likely you are to find that expert who's willing to work with you.
Fantastic suggestions. So once you have this expert, either a bookkeeper, accountant, or both, how do you maintain a relationship? What's the cadence like for communicating with that person throughout the year and then during tax season?
Well, for us, we keep in contact with our clients on a monthly basis. Since we're providing financials on a monthly basis, then, we talk to them about certain things that we have questions about within their financials. So say, for instance, they give us a bank statement and a credit card statement, and we go through those transactions. As we go through, there's certain things that are unclear as to, what their spendings are, why they were spending certain things, and what, place they should go within the chart of accounts and the financials. And so, I would say that you probably should be talking to your bookkeeper or accountant on a monthly basis.
Great. Shifting gears a little bit into how a business owner works with their personal taxes versus their business taxes. One of our owners in the community, Deb Rock, asked, how do I prove business income as earned income? Do I print my own W-2 for the salary I pay myself as a business owner?
What a great question. I think that if this person is their own business owner and they're not running their personal income as salary, as W-2 employment through like their own payroll provider or cutting themselves a check, assuming they're not doing that, and then of course withholding taxes on employment income, assuming that this is just self-employment income or 1099 income, the IRS will take you at your word when you self-report income on your Schedule C, which is your business profit and loss, really again for sole proprietors or self-employed people. So I don't think that there's really any issue around having to prove the income. I think maybe it's different when we're talking about a situation where the IRS puts you under audit. But for the most part, tell the truth and then simply provide the documentation that they asked for. But no need to fill out your own 1099, no need to fill out your own W-2, just the Schedule C at the end of the year.
And a follow-up from that one of our attendees is asking, how are owner distributions treated on the personal tax return? Are they included in the calculation of tax due, or do they only impact ownership basis?
Interesting. So again, putting the flag up that I'm not this person's CPA. Broadly speaking, if it is a capital distribution from the entity, it's not self-employment income, it's not taking a salary, it would just be treated as normal 1099 income. It's a little bit different when we talk about stock and capital gains, which I assume doesn't apply here. Just broadly if you take money out of your company to pay yourself for really any reason, other than it being a salary where you run it through payroll and you withhold taxes and you pay every quarter, you should expect that you now personally will need to be paying taxes every quarter on that distribution.
Great, thank you. Okay, so another big bucket of taxes are deductions, as we all know. One of our community members, Orion Brown, asked, my question as a solopreneur, are there any deductions that I should be on the lookout for that many entrepreneurs commonly miss? And if we could actually back up, and if one of you wants to define what is a tax deduction, that would be a great way to start in case anyone's not entirely sure.
A deduction, broadly speaking, is anything that reduces your taxable income. So if you think about income, you're taxed on that, but the IRS gives you the opportunity to make a allowable deduction, and generally those are business expenses. We can get into maybe about what business expenses are deductible at what rate, 100% versus 50% versus none. But again, it's the subtraction part of that equation, so that the number that you get after that, your adjusted gross income or your net income, that's what the IRS is actually going to tax you on.
Got it. So are there ones that solopreneurs or entrepreneurs should specifically look out for, or that they commonly miss?
Jaysa, do you have a favorite deduction that people miss?
Yeah, I would say that like the home office deduction. Say, for instance, that you do not have a physical office location and are working from your home. There are certain deductions you can take for the amount of square feet that you use within your home for your office. So that's something to consider. Now I would say maybe 2 years ago, we could deduct meals and entertainment. Now we can only deduct meals. And so, separating the meal portion from your entertainment so that you can deduct those. Before we would have meals and entertainment on the books. Now we have meals and then we have entertainment separate, because for book purposes, you can deduct your entertainment, but for tax purposes, that's no longer deductible. Like if you're starting a business, the cost to start your business is something that can be deducted. And then a lot of people might, forget, I'm just trying to, get this business going. But a lot of those efforts that are taken in order to, efforts and expenses taken in order to start your business, those are also deductible.
One of my favorite deductions that I think is not very well known is for unique to self-employed people and business owners. If essentially you can deduct a portion or all of your health insurance premiums under certain conditions, and maybe we can follow this up. I can link to the IRS guidance on this, and I'm not going to remember the exact form off the top of my head. But what's really interesting is if you're an employee and you work for a company, if they provide health insurance, great, that's awesome. If they don't provide health insurance, you have to pay out of pocket, even if you work for somebody else. But the IRS doesn't allow you to deduct, generally deduct that premium that you're paying. However, they do allow essentially a small business to deduct that, the same way that a W-2 employer is able to deduct that. So there's some really cool things that by being self-employed, you actually get to take advantage of a lot of traditional business tax breaks and incentives. So that effectively, if you're a one-person consultant, regardless of whether or not you have your own legal entity like an LLC, or maybe you're just a sole proprietor, the IRS gives you the option to be able to actually deduct that cost of healthcare.
That's amazing. Jaysa, one of the things that stood out to me, and I wonder if this is on anyone else's mind, is on the home office deductions. Could that apply even if it's only part of the year, such as what we're all kind of going through right now? Or is that kind of if you're doing it in general?
I would say if you have, so like, right now, we have an office location, but we're having to work from home. I'm not 100% sure about this, but I would think that the home office in that instance would not be deductible. But if you do not have an office location and say you are a seasonal entrepreneur and you work maybe just January to April, I would take that portion of your, for the year. So I would look at what my expenses are for the year and take, 1/3 of those expenses and deduct it on my taxes.
Got it. And how can business owners know which deductions apply to them? Is it just kind of looking at the list and seeing which ones um, sound like they apply, or do you have to check it out in a certain way and verify? How does that work?
I would say that if you look at a Schedule C and you see a box that says, you can deduct um, travel, then that applies to most people, or everyone, is so long as the travel is related to, your business. And so, I think if you have any questions, that's when you would consult with a, CPA or accountant, someone who is knowledgeable in that area.
Got it.
Trent, I don't know if
Anything?
you have anything to add to that.
No, I think you answered it pretty well.
Perfect. One other one kind of on this current situation. So the tax deadline, as most people know, for personal and businesses has been extended to July 15th. So what does that mean for business owners right now? And what do they have to do in light of that new extension?
Yeah. So I think we'll skip the story of all the different deadlines that the IRS and the White House and the Treasury Department gave out that confused everyone. We'll just talk about, as of today, according to like official IRS guidance, the story is that you will not incur a penalty if you as an individual or you as a self-employed person or a business do not choose to file your tax return at the typical tax date, or you choose not to file for an extension, until September or October. If you want, you can take your time and you can file and pay as late as July 15 without incurring any penalties. So I think generally speaking, if you think you're a person who's going to owe money, and most self-employed people end up owing money if they didn't withhold and pay every single quarter, this is actually essentially an interest-free loan from the Treasury Department. You should consider taking it if you have other more urgent things in your life that you need to attend to, which many Americans do. You should consider taking it if that cost of capital is less. But I would say the asterisk on this is make sure that you are confident that if you push this can down the road, you're actually still going to be able to pay dollar for dollar what you owe by July 15th when you submit. The other thing to think about this is that if you are employed or you have self-employment income and W-2 employment income, chances are you will probably end up getting a tax refund on your W-2 income. You typically you over withhold usually. So if you think that you're going to end up being owed money back, the IRS would actually encourage you, hey, there's no need for you to give us a 0% interest loan on the money we're holding for you. You should still file your taxes at your convenience. It could be today, it could be, it could be July 15th. But the sooner you file your taxes, if you think you're going to get a refund, and maybe you should just go on there and check. There's no reason why you should wait later if you can get that money earlier.
Yeah, another thing is, as a business owner, you're required to make estimated tax payments on April 15th, June 15th, September 15th, and January 15th. With the tax extension, the July 15th date, what they're saying now, even for that April 15th and the June 15th, those first two estimated tax payments, that those are also being pushed to July 15th. And so that's something to consider, that you no longer have to make the first two estimated tax payments until July.
Yeah, exactly. And we actually, maybe that could be your next question, Sandra. Maybe we should talk about what are quarterly estimated tax payments.
Yeah,
Everybody knows about annual taxes.
Yeah, perfect lead in. And Trent, do you want to quickly fill us in what are quarterly estimated taxes?
Sure. So this is really the main thing that our company helps other apps, and whether they're bookkeeping or invoicing tools or payroll tools. The main thing that we all experienced as a team when we all freelanced ourselves was that we could have the world's best bookkeepers, we could have the world's best bookkeeping software, we could even have the greatest accountants that told us, here's how much you're going to owe in taxes, and they could remind us, hey, every quarter the IRS expects you to pay what you owe in taxes. You basically have to prepay every quarter so that you have enough money set aside at the end of the year when you file your taxes. And the reason you have to do this is that, as far as the IRS is concerned, even if you're just you're an individual, say photographer or event planner or consultant, the IRS sees you as a business owner. And so businesses have to file, every business has to file, has to submit an estimated quarterly tax payment every quarter. And so the realization that our team had was, even if you have all the expertise in the world, do you have the discipline to not spend what you owe? And so that's why it's so important that freelancers and self-employed and business owners are actually setting aside the money and then getting it to the government, because if you don't submit quarterly, you will incur penalties, and that will eat into your refund.
So then if a business owner is paying the quarterly estimated taxes, that's if they own their business or if they're a freelancer, right?
Yeah.
Okay. So then how do they
I'd like to make
those?
a point here,
Go
though.
ahead, Jaysa.
Oftentimes, like if you are a freelancer and you have another job, so you have a W-2 job and you do work on the side, your W-2 withholdings go towards your overall expected tax liability at the end of the year. So say, for instance, that you have withholdings of $10,000 for the course of the year, and your expected taxable tax liability is going to be $9,000. You know, even considering your freelanced income and expenses, the profits from your freelance activity, then you would not have to make estimated tax payments, because your withholdings are considered from your W-2 job are considered to go towards your tax liability. So oftentimes what people will do is say for instance, you accidentally miss your, April 15th, your June 15th, your September 15th, you can have more deductions withheld from, or more withholdings withheld from your paycheck in order to compensate for not making those, first three estimated tax payments. And that money will go towards your tax liability without any penalty. I don't know, Trent, if you probably can make that sound prettier than what I did.
No, I think you said it really well. I think you're right. If you are lucky enough to have both W-2 income and 1099 income as an independent worker, you do have that option, Jaysa, that you just explained. I think that the thing to consider is, if you are, the further on in the year that you are, the more you're going to have to ask your HR department or your payroll to withhold. So that then becomes, of course, a question of what happens if I have to withhold so much that the actual take home after withholding is difficult. So again, it's always better to try to fix this as quickly as you can. But in the worst case scenario, I think we're making it sound really scary. The worst case scenario, if you do miss your quarterly estimated tax payment, or you even fail to pay what you owe in tax at the end of the year, obviously never recommended. But if you're looking at the actual penalty and interest rate, assuming you don't even enter into like a repayment plan with the IRS, the interest rates are relatively low. They're not nothing. Typically, it's in the range of 5%. But that just to keep people kind of feeling constructed, like this is, you can dig yourself out of a hole if you're 1 or 2 years behind. It's not as bad as it's not as expensive as student debt or credit cards, but it is something you don't want to let run on for too long.
And how does a business owner or a freelancer kind of estimate those quarterly tax payments and make those? Are they looking at their books, or how does that work?
Yeah, ideally, they're either doing bookkeeping themselves, they're using a bookkeeping service, they're using software that is looking at, again, all of their business income, then taking into consideration what deductions they can remove from that, and then afterwards look at, okay, what is my federal self-employment tax, which includes Medicare, aspect of Social Security. That's typically around 15.3%. That's pretty flat. And then you should just be looking at your state personal income and then your federal personal income. And you can use calculators. There are a lot of free calculators online, which I think are a really good first step. You can hire a service. You can use a product that is taking into consideration all those different elements that go into that calculation. Ideally, you're using, and again, this is, I guess, kind of a shameless plug, but ideally you're using a product that doesn't require you to kind of stop and start all the time and having to do manual calculations. You should be using technology that just knows where you are, and for every additional dollar knows how to estimate how much taxes you owe.
And what's the name of that software again, Trent?
The free one is self-saver.org from AARP.
Perfect. Awesome. I wonder also if moving on from the quarterly estimated taxes, how does the way a business is incorporated affect how the business owner pays their taxes?
Yeah, real quickly, the thing to remember is the type of income. So really for this conversation, we're really only talking about 2 types of income: W-2, which is employment income. And so it's employment if someone else has withheld for you. So if you are, it doesn't really matter what entity you are. If you're a C Corp, if you're an LLC, if you're a sole proprietor, you could possibly be still your own employee if you're running it through payroll software that's doing the calculations and the withholdings for you, like as if you work for somebody else. However, if you are a LLC or a C Corp or a sole proprietor and no one is withholding for you, that's when those quarterly estimated tax payments essentially apply, where you have to do it yourself, either through an expert or through software. That to me is the headline. I think that there's a little bit more nuance if C Corp versus being treated as versus completely pass-through entities like LLCs. The nuance is about how the entity gets taxed before the distribution of that income goes to you. I think probably be best, rather than me trying to butcher that, I think that I can certainly include a really good link to explaining that on the IRS website. But broadly speaking, just think about it. If someone else has withheld for you, then you're good. That's after-tax income. If no one has withheld for you, you have to find a way to do it, regardless of entity.
Jaysa, anything to add on that as well, on how businesses are incorporated, affecting how they pay their taxes?
No, I think Trent did a very good job in explaining that.
Great. It looks like we have a question from one of our audience members around this, sort of. Janice asks, can you speak to what a first-year startup not making any money or selling because the product is still being created? Any thoughts on what I need to be aware of from a tax standpoint? And if beneficial, this startup is a Delaware C Corp.
I'm happy to jump in on that one. Been there, so I definitely know this situation. So the first thing to think about is if you do have an entity like a Delaware C Corp, think about the income that's coming in. And if you're saying you're not having any income, but you presumably are spending money, you're obviously operating at a loss. And you should obviously still have to file taxes. You have to file an annual franchise tax statement to the state of Delaware, which is like just a very, very simple annual report. But the IRS will expect you to fill out an actual business tax filing. But you still want to do that because you want to report a loss. And eventually when you do make money, you can go back and actually carry forward the loss that you incur, for the number of years that you lose money. You can then have that offset some of the income that you make in future years.
Yeah, and I think another thing to be aware of with, developing products, is how you record that on the financials. And so if you are developing a product, let's say you are, I don't know, building a widget, and this widget costs $100,000 in order to build, you would need to capitalize that widget. And what capitalize means is to make that widget into an asset on the balance sheet, so that as like a work in progress until the widget is complete. And then once the widget is complete, you would amortize that over a period of time, so that as you start pulling in revenue on that widget, you can have expenses against that widget in order to make the revenue and expense match on the profit and loss statement. So you wouldn't take 100% of the cost of that widget and have this big loss at the in year one of your business as you're developing it, and then year 2, 3, and 4 you have all these revenues that you don't have the loss to offset. So that's something to also consider.
That's a great point, Jaysa.
One more thing I'd love to add, I guess, in this particular example, the startup being a Delaware C Corp, presumably they've incorporated in Delaware because that's what investors like to see. They're comfortable with that jurisdiction, but presumably they don't live in Delaware. So just this person probably already knows that if they live in, say, in California, if they employ multiple people in California, they're operating as a foreign corporation operating in California. California is very persistent about making sure that you all obviously register with California as well, and there's some tax compliance required for essentially the state that you reside in.
That's a great point. And one other thing that that came to my mind about this is there are R&D federal credits available as well when you're doing research and development on products. So that's something that you might look into as well. And I know we have a guide on Hello Alice specifically about that. Okay, we have another question that came in from an attendee. Who should you go to get caught up, get on a repayment with the IRS? I asked this question to the local business support organization. They were not helpful. Would a bookkeeper be able to help with this sort of thing? Getting caught up on repayments to the IRS.
Usually, you would have an IRS agent that you would negotiate your terms for the repayment of taxes that are due from the past. And so you can negotiate those terms with your IRS agent directly.
Yeah, exactly. I mean, just to add, if you willingly and voluntarily go to them and say, hey, I'm behind on my taxes, but I really can't pay it all in one go, I need help. From what I've understood from the many freelancers that we work with in the past, they are almost all, I would say, nearly always greeted the way you'd want to be greeted in terms of the IRS. They care more about getting paid back eventually, or even part of it eventually, rather than holding it over your head and not getting any of it back. So typically they will work with you. It's kind of like, think about it for forbearance on student loans. It's a similar situation where you're going to have to demonstrate ability to pay. What does your monthly cash flow look like? Again, be truthful, it is the government. But the idea there is that they're there to work with you to put you back on the plan. That's just business as normal or business as usual. I think we're in a very different business climate right now. So I think the elephant in the room is that many people are going to go through financial hardship because of just systemically what we're going through right now because of COVID-19 and the reaction to it. So what the IRS has done so far is definitely leaning on the side of making things easier for taxpayers. I think that things are probably going to continue in that direction. So I think if there was ever a time to ask for help, this tax year is going to be one of the better ones.
That's a great point. So what happens if you do get audited, or what is an audit even to begin with?
Real briefly, I think a way to put an audit is in the frame of you either filed your taxes or you didn't. If you didn't file your taxes, the IRS will usually file it in absentia, where they'll file for you, and then it's up to you to go ahead and prove differently. But more often, if you file taxes and it comes under review, there's many different reasons why it might get flagged. Small business owners are much more likely to get audited than, say, just an individual employee with a very simple, like, standard deduction. But in general, auditing means that the IRS either doesn't believe you, or they think that they may have found an error that would substantially change the amount of money that you owe. So presumably the IRS does not spend resources trying to go out and find people who over-reported taxes. They usually find people that underreported taxes. So if they think that they have any reason to believe that you are taking deductions that you shouldn't, or the deductions are unreasonable in comparison to the income. The other thing is like the hobby audit. If you run a business at a loss for multiple years and they think that your business is doing better than you're representing, that would increase your chances of an audit as well.
Jaysa, anything to add on that, or how a small business can avoid getting audited?
I would say do an analysis of your prior year deductions to your current year deductions and understanding why there are differences. So for instance, if maybe in 2018 you had $5,000 worth of meals that you were deducting, but in 2019 you have $15,000 of meals that you're deducting, the IRS might think that you decided to take a more aggressive position in 2019 and it could flag you for an audit. This is just an example. So looking at, prior year to current year and understanding what the differences are. Maybe you have $15,000 worth of meals because your income tripled and, you needed to take more customers out to meals in order to get the income that you had that triple. So then it makes sense, and you have the receipts for that. I would just look down the line and say, what are the differences between current year and prior year, and why? And I think that would help.
Perfect. All right. Moving on from auditing, which hopefully people don't have to go through. One of our business owners actually asked, going back to that hiring a bookkeeper question earlier, what is the kind of estimated range of costs for services for a small business or freelancer hiring one? I never know how much this should cost.
I was going to mention that there are some free options out there. Self-saver is one of them, but I think I would definitely say the more complex your situation is, the more you want a human involved. So do it yourself, whether it be with a free tool. Maybe you like Excel or Google Sheets and you're doing it and you take the time to understand the rules. But presumably the cost is going to be really a reflection of the value you get out of the service.
Yeah, I would agree.
And in terms of software, is there any specific softwares that you'd recommend for bookkeeping or taxes?
I would say for bookkeeping, Intuit, QuickBooks Online does very well. They have a feed that connects directly to your bank, and so you can kind of pull those transactions in and code them to the proper place on your chart of accounts. I've heard of other softwares out there like Xero, and there's another one, but for me personally, I enjoyed working with QuickBooks the most, and I think it's the most user-friendly.
I think QuickBooks is a great example of a much more powerful bookkeeping software. It's so powerful that obviously you've got Jaysa who are bookkeepers that can work through it. If you don't need something as powerful and you just essentially have a relatively simple situation and you want it to output to a Schedule C, there's free options out there. AARP Self-Saver is not the only one, but that's certainly something that would help.
And it looks like you just asked what one of our attendees asked, what's the difference between QuickBooks and Self-Saver?
Actually, there is.
Oh, go ahead.
Yeah, so what's kind of interesting is Self-Saver does have basic bookkeeping. It's not as advanced as say QuickBooks, but what Self-Saver does have that QuickBooks doesn't yet have is once you go through and you do your income and expenses and it does your deductions, Self-Saver will actually withhold the money for you. It has a very accurate tax calculator, and it will actually help you, if you want it to, pull the money out of your bank account and then set it aside into a tax withholding account. And at the end of the quarter, send it on to the IRS for you. So it's what we're trying to do with Self-Saver is actually make it feel like, even though you're on your own as a business owner or self-employed person, it's designed to feel much more like being someone else's employee when it comes to the tax side.
Well, that's great. So it automatically kind of estimates those quarterly taxes we were talking about earlier as well. Awesome. Are there any other questions from the audience? Feel free to pop those in as we're wrapping up here. One of the last questions that I had was around business owners preparing taxes themselves. Just to reiterate, are there any reasons they should or shouldn't prepare their taxes themselves?
I think that when you are starting out, you might have the draw to do it yourself. I think if your situation is pretty simple, online software like H&R Block, TurboTax, or Tax Act, those will probably be good enough while your situation is simple. But as your situation gets more and more complex, you really do owe it to your business to actually hire a professional, even if it does cost $1,000 or $2,000 or a little bit more. When you're making enough money and there's that much risk, that maybe not even just that you risk an audit because you didn't do the right deductions, but I think if you do hire a professional once you're making enough income, they might actually find new ways for you to do additional tax advantage deductions or elections.
That's great. And I have one other question, just because we are in this crazy current climate. Where should people go to find out the latest on these different tax changes going on? If unfortunately they are going through financial struggles, what are some of the things that they should be on the lookout for during this time?
The IRS website I'll find the exact URL. They have something called the Self-Employment and Gig Economy Center that the IRS just launched about 2 months ago. It's really great. It's a great kind of like table of contents to all the guidance the IRS gives. And it's a little bit easier to read and consume. So that's the first place I would start. Also, given that there have been so many changes over the last couple of weeks, I think the one source everyone should trust the most is whatever official guidance is on the irs.gov website.
Jaysa, anything to add there as well?
Yeah, I also wanted to add that, the SBA has a lot of resources. Right now, they're giving away loans, 6 times operating expenses at 3.75% interest rate for as long as a 30-year term. And so if you're having a hard time making it through this time, given the COVID-19 and the, nationwide lockdown is what I'll call it, there are resources there. And the IRS is even saying that if you, with the new law, that if you keep your employees, if you do have employees on for, the duration of this lockdown, that they might even turn your loan into a grant, and which means that they would forgive repayment of the loan altogether. And so those are definitely things to look into, you know, to contact your local SBA office. If you guys have additional questions, we also have done quite a bit of research on that. So you can contact us at info@accuratemethods.com, and we can provide additional details about that.
That's fantastic. Yeah. And just as a quick plug on the Alice side as well, we've created a COVID-19 Business Resource Center, kind of compiling and aggregating all of these national, state, and city specific resources like these loans, like these grants that are being offered from the government and other entities right now. And this week we launched our own $10,000 emergency COVID-19 grants. So definitely check out the website to learn more. I've just linked in the chat as well. Great. Well, we are about wrapped up here. Trent and Jaysa, are there any other things that you wanted to add in about this discussion?
One more thing. I believe this is still Women's History Month, right?
Yes. Yeah.
So I know this will be for a different call, but if anyone has any extra time on their hands, a really historical figure that I feel like more people need to know about is a mathematician named Ada Lovelace. And I'll just leave it there, but kind of from a tech and entrepreneurial hero of mine that more people need to know about.
Yeah, she's awesome. Jaysa, anything on your end too?
No, that's pretty much it. If anybody does need help, like I said, with even the bookkeeping, I know some people mentioned that they were a year behind. You know, we're here to help with that also. And so again, you can reach us at www.accuratemethods.com or info@accuratemethods.com, and we'll be glad to help.
Fantastic. Well, thank you both so much for your time and expertise. This was a really great discussion. I myself learned a ton, and I'm sure our audience did too. For everyone who tuned in, thank you so much. We will be sharing the recording of this in an email tomorrow, and you'll be able to access it on helloalice.com as well. We'll also share all of these fantastic links that Trent talked about in that follow-up email, as well as that COVID-19 Business Center again, and Jaysa's info@accuratemethods.com email. So thank you all so much, and hope you're all staying safe. Let us know if you do need anything. Thanks, everyone.